Okay, everything, let's clarify the situation. Since day one, there has been a growing expectation that XRP will reach a monumental milestone. $10,000 was not only a possibility but also a given and an estimate. That forecast just received a massive boost. We are discussing none other than Larry Finn of BlackRock endorsing this image, and he's not just talking about a pitiful $10,000 per XRP. Whoa, he's making it sound like a basic must. Before our leap, let's dive right into the core of today's topic. BAS, I need a little help. To join our incredible community, simply click the like button, subscribe, and ring the notification bell. Imagine heavyweights where it gets juicy. Titans of finance, similar to BlackRock and Vanguard, are now giving XRP serious consideration for their international transactions. Hang on, things will get better. There have been murmurs about BlackRock. BlackRock is considering the release of an ETF that focuses on XRP. Yes, you heard correctly, but there's more. Hold on. Not content to stop there, Larry Fink is now examining the enormous $3 trillion real estate market and speculating about what lies at the core of its future. You guessed it. The XRP, the ledger, is ready to tokenize all transactions, with an impressive 1.2 quadrillion coming from traders and international swaps through ISDA. The association has set itself up to process transactions through XRP. We're not just talking about $10,000 per XRP here, Ledger and Ripple, that's child's play. We could be looking at a value explosion of up to $60,000. Let's jump right into the following section. Larry believes that BlackRock just released another explosive. He's not just speaking, he's acting as though Ripple and its digital asset, XRP, are about to do something very significant. He is tokenizing every aspect. We have a clip that is included in our video. That will draw attention. We won't have to wait much longer because Larry appears to be confirming BlackRock's approach to an XRP ETF. Here's the clip you've been waiting for. A good way to legitimize it and increase safety is to wait for the release of the Bitcoin ETF. Permit me to state this, are you going to do another ETF? Consider an XRP or an ETF. You have Ether out there, I know that. Consider XRP. Could you respond to that? You don't want me to, and I can't. I perform well. I can't have it all. Give me the wrap, please. I'm grateful. We've seen a swirl of abnormalities in the cryptocurrency world in recent days, especially with this XRP image on the well-known exchange Crypto.com, whose value surged to an astounding $43,000. This is not a one-time occurrence. It fits into a larger pattern of XRP's value unexpectedly rising. Recall how just last week, we talked about a $7,000 XRP problem at a major exchange. Well, suddenly now it's time for Crypto.com, and it appears that these abrupt increases in XRP's value are starting to happen frequently on several exchanges. However, let's shift our focus entirely to something else, something I learned through extensive research that is equally fascinating and unrelated to BlackRock or the recent surge in the XRP market. We're going to talk about Gary Gensler, the well-known SEC chairman who succeeded Jake Clinton. As most of you are probably aware, Gensler consistently rates XRP as a security. This is the interesting part. Robert M. Gensler, Gary's brother, is astonishingly similar in age to Gary. Robert played a significant role in T-Price as its vice president during this period, where a closer examination reveals that TR Pricing is more than just an ordinary investment organization. It's a prominent player in the investment space, primarily in XRP, Ethereum, and Bitcoin. Thus, this has an interesting connection. Gary Gensler, however, was at the steering wheel. The SEC continues to classify XRP as a security. His twin brother, through a well-known investment firm, is a major investor in RP and other cryptocurrencies. It's an exciting position. That brings up a lot of issues. Regarding the complex forces at work in the realm of cryptocurrency investments and regulations, it's intriguing to consider the possibility that Vice President of TR Price, Robert Gentler, could have unique insights. Robert Gentler has unique knowledge regarding XRP's potential to be comparable to Bitcoin, and when you take into account the company's significant holdings in these three cryptocurrencies, while the SEC openly refutes any suggestion of insider trading, this theory begins to take hold. Numerous studies and papers focusing on insider trading and market manipulation have consistently exposed questionable SEC practices. A trend appears to be emerging. SEC officials are reportedly informing their family members about the potential release of digital assets from securities classification. These relatives then make early investments in these assets, and when the asset is formally deemed to be not a security, its value soars, enabling these friends and family members to profit handsomely from buying low and selling high in this situation. Let's examine the probability that Robert and Gentler had inside information about the SEC's possible defeat in a lawsuit against XRP from his brother Gary Gentler. Congress might push for a settlement based on such information. Between the SEC and Ripple Labs, astute investors can now purchase XRP at the perfect time, but as the cryptocurrency's price rises, investors are shifting their investments towards Bitcoin, Ethereum, and most importantly, XRP, thereby adding another chapter to this story. The cryptocurrency community is abuzz with talk of XRP possibly rising to $10,000, $20,000, or even $60,000, especially from analysts who have been bullish on the asset, such as Jack the Ripper forecasts a sharp increase in value that could eclipse $589. Despite being audacious, this forecast highlights the increased interest and conjecture surrounding XRP and its potential in the cryptocurrency space. Wall Street is vying for a piece of the profitable XRP pie, and based on my intuition, the first significant move will come through an XRP ETF. However, let's delve deeper into this development. We have some fascinating news from Crypt Basics. An analyst's revelation that JP Morgan has made a significant move into XRP has piqued the interest of a former Ripple director. This revelation definitely made me wonder, and it's something we need to investigate more. An influential person in the cryptosphere reported that Ben Armstrong, previously associated with the BitBoy crypto brand, had resurfaced certain contentious CLS claims about JP Morgan's purported involvement in XRP. This prompted a response from the former Ripple director, Armstrong. He asserts that JP Morgan currently owns a substantial 7.5 million XRP tokens. Armstrong continues by stating that this transaction represented roughly 7.5% of JP Morgan's overall fortune, but to put it in perspective, the math here looks wildly incorrect. Armstrong's figure doesn't quite match up because JP Morgan's total assets are a huge $3.89 trillion as of 2023 estimation. 7.5 million XRP, at its present value of 4.46 million, doesn't even come close to 7.5% of JP Morgan's wealth. Armstrong highlights the relevance of JP Morgan's alleged plan, claiming that they have been covertly hoarding XRP. This, in his opinion, positions JP Morgan as a rising force in the cryptocurrency space. As a result, we've got Wall Street behemoths like JP Morgan may be entering the cryptocurrency space, particularly with the introduction of XRP. Despite the potential inaccuracy of the figures, it's important to acknowledge the entry of major financial institutions into the cryptocurrency space. It suggests a broader pattern in which traditional banking and the world of digital currencies interact, with XRP at the core of some intriguing developments in Armstrong's. Additionally, bold remarks have brought attention to BlackRock, the titan of asset management. His assertions that BlackRock has recently received clearance from its own shareholders are stirring up controversy. The Bitcoin ETF is now looking to invest in XRP. Portfolio Armstrong continued after it. He is also concentrating on the ongoing legal dispute between Ripple and the U.S. Securities and Exchange Commission, which is centered around the fact that these financial giants are entering into. The point is, even though the current legal drama indicates a strong conviction in XRP's bright future, imagine if this accumulation pattern is real. That would mean that major financial institutions are placing bets on XRP despite its turbulent regulatory history. The adoption of cryptocurrency by Wall Street was always inevitable. I've been discussing this for more than 5 years, but at the time, it seemed like a pipe dream. However, considering where Bitcoin is now and the likelihood that XRP won't follow suit, I would have to respectfully disagree that the question is not if but when. Having said that, the specific scenario portrayed in Armstrong's image warrants further consideration. That may not be the complete picture, but, get this, the story becomes more complex in response to Armstrong's shocking assertions. Former Ripple director Matt Hamilton added a healthy dose of skepticism, questioning the authenticity of such a purchase as well as the real impact it would have on XRP considering the token's enormous size. Hamilton pulls out the calculator after being supplied. Considering that there are 100 billion XRP in circulation, 7.5 million XRP is just 0.0075% of that total. In response to Armstrong's assertions that it's a cheesy homage to the frequently surreal nature of Armstrong's pronouncements, implying you'd practically need a satirical lens to make sense of it all, Hamilton even joked, "I guess this is a parody account." Since the math speaks for itself, let's examine it in more detail. It's obvious as day that the numbers don't add up, but Hamilton's analysis of the facts, which highlighted the blatant errors in the original claim, got me thinking. Where did this bizarre tale even start? Folks, I've done my research and found the treasure. I've located the source, and it's a biggie, so there you have it in the convoluted and frequently unclear realm of cryptocurrency. It's important to maintain your composure when reporting, and as always, I can help. You navigate these turbulent waves with confidence. The actual details, remember, I am not a professional financial advisor. The content in these videos is solely for your entertainment. I consistently recommend individuals conduct independent research and consult with experts before making any financial decisions. Thank you very much for watching. If you found the video entertaining, please click the like button. Additionally, remember to click the subscribe button and activate the alerts to be the first to know when I post new content. I'm eager to see you in the next video when I reveal fresh content, so please take care.